everyone and welcome back to our YouTube channel. मैं हूँ चारू आपके साथ and we are back again with the next episode of हम दो हमारे दो season. Guys, please keep watching all the videos and keep giving me feedbacks and tips in the comment section below. So today we have done some more gold digging inside Nifty 50 and found out two reasonably priced stocks in out next part of the season. First one is Oil and Natural Gas Corporation, which is ONGC. So the current market price is around rupees 100 and target price is around rupees 150 in 2 months holding period and 150 in 1 year. Let's begin with the fundamental analysis. And the stock regularly pays 5 rupees a dividend on occasion per share. This effectively translates into 8 to 10% return on investments for the investor. Oil and Natural Gas Corporation is a leading player in the Indian oil industry with operations in oil exploration, production and drilling. Its subsidiary ONGC Videsh is also on the verge of listing via IPO with a better oil block stake basket all across the globe, especially Russia and Mozambique. The government aims to maximize the revenue of the company and protect India against adverse oil prices as India imports more than 80% of its oil. The government aims to expand oil business in African as well as Russian region via buyouts of stakes in existing oil producers or their units. ONGC Videsh has to perform well to be suitable to launch an IPO. So we recommend a buy on the stock for short term. Target can be around 120 to 125 in a couple of months. Now let's move on to the technical analysis. So short-term charts indicate resistance at 120 around and already a double top is formed here at 100 to 110 level, which indicates short-term correction. Once that resistance level is taken out, the stock will zoom. The stock is highly volatile to lockdown news and is price sensitive. So it has huge volume too. Oil producing companies also can gain from the crude oil price rise and lifting of lockdown. There is a consistent long-term consolidation in this stock. The rectangular pattern is seen where it moves in that range of support and resistance. It gets instant selling at higher levels. So ONGC can be accumulated on dips and held for long term to get big dividend and share price appreciation of around 30 to 50%. The stock loses RSI quickly as and when trend is there. Overall, it can't get that strong RSI. It indicates the strength of stocks into portfolio. So it can't be a 5 to 10 year long-term horizon with oil fading away in long run and giving away to electric mobility to protect our environment. Now the next stock which we recommend is State Bank of India. So the capital market price is rupees 280 and target price rupees 350 to 400 in medium and long-term robust. Tier 1 capital ratio of 11.9% and a strong liability franchisee makes this stock a compelling buy at current valuation. Manageable asset quality outlook with a 97% collection efficiency, guidance of just rupees 60,000 crore for financial year 2021, slip pages and restructuring 2.5% of gross advances and only rupees 2,000 crore of provisions remaining in the financials provide comfort. Stock trades at 1.2 2 times by 1 times its financial year ending 2022 by financial year ending 2023 price earning multiple ratio average, which is reasonable. While we maintain cautious stance on PSU banks, we find that SBI is best placed among government banks with strong fundamentals. We maintain a buy rating on the stock with a target of rupees 350 in medium term of 6 to 9 months and 400 in long term of 2 years, assuming the balance sheet will improve and net NPA ratio will become more and more favorable. Sanctions and disbursements of loans and credits soared year-on-year basis in Q2 financial year 2021 for most retail products. Asset quality outlook appears better with the bank guiding for total slippages and restructuring. Key risk for PSU banks including SBI is of the net NPA ratio. If we see banks like Central Bank of India, which used to trade above 200, has now destructively fallen to just rupees 13 per share due to net NPA ratio. Crossing above 10, so the net NPA ratio crossing about 10, so risk of further NPAs, especially in the corporate, agri and or retail segments due to overall macroeconomic slowdown and prolonged pandemic recovery would impact growth and profitability. So based on the foregoing description, we recommend our buy stance for an upside about 25% returns in 6 months time frame. Also, if budget on 1st of February 2021 announced recapitalization, then this target may be met sooner, maybe within 1 or 2 months. So guys, this is a compelling buy as it also has lesser risk. Now let's move on to the technical analysis. The stock has a neutral RSI around 50 levels. Therefore, it can't be used for trading volatility as there are chances of trapping. Maybe some people might take up a risk due to budget, so all the best for them. We will advise to use your valuable capital to trade in high beta stocks which offer predictability and some volatility. Government banks aren't the stock for intraday trades and not even advisable for positions 50-day holding traders. We would suggest to buy SBI for at least medium to long term, 6 months to 2-year time frame. The stock is not having a predictable trend line and breakout patterns too, which gives you the risk of getting whipsawed and trapped at higher end prices. So better to do investment in this stock and no trading for short term. It was once a darling of FIIs and DIIs when the buying had raised the price to around 400 levels. But now the NPAs and emergence of the willfully defaulting corporates have turned FIIs wary of such PSU banks. However, this is the best bank among the PSUs and there will be more consolidation towards loan growth in this bank's favor. So I believe considering growth prospects, there will be buying at support and trend line support maintained, and after some consolidation, a durable breakout will be possible. Also, MACD and RSI will cross 60 during a rally and it should give convenient returns to the shareholders. So guys, that's it for today, and please do subscribe the channel, share this video with maximum number of people, and till then stay tuned with us. We'll be back with another season. Thank you.